Hello to all traders, and we're back once again with another market review brought to you by Orbex. So as the chaos has calmed down, you could say, over the past week of the tariff turmoil, we're seeing gold have a little bit of a bounce back now after dropping below the 3,000 level, and that's actually for the first time in a while. We sort of crept up in the middle of March, and since then we've been trading nicely higher, hitting another record high. But obviously since then, very undecided market. Even the dollar has been collapsing as well as the gold, so it's pretty much a case of a very unclear, uncertain market. Sentiment is all over the place, and now we're just looking for the next pickup in price action. Well, we've seen it at the moment because we're seeing the 3,000 handle, which we've actually just marked out on the chart here. We had a dip, or a bit of a false spike before that, down to the downside, but since then that was pretty much bounced back. But then we had this four very detrimental candlesticks, one being yesterday where we saw quite a drop below 3,000, just trading around 29.60, but now bouncing $50 to the upside and just getting back on track above 3,000. A lot of analysts are wondering that if we do have a sharp sell-off after this nice bounce, then we could be seeing possibly 2,900 being hit before we know it. Another $100 spill to the downside. Obviously, with the dollar not really giving us too much direction as well, it'll just be anyone's guess at the moment if the the next day's FOMC and their inflation data is going to have any bearings. So the RSI in oversold territory, so we were expecting a bounce higher, but it just depends how much of this bounce is going to keep on going. Let's just bring it onto the hourly chart because we just want to see now where we're heading in the near term, and just delete some of these drawings so we can just get right into the action here. And like I said, a nice spur of roughly about $50 higher, but that's not really been too comforting in the recent events because we've had, such a downturn, such detrimental downturns in the market. If we look from the recent record high of above 31.50, $150 being dropped off in just a few short sessions. So that's the state of the market at the moment. Let's just look on the Dixie, the DXY index, because we're just seeing now that 4-hour chart is really starting to take shape. We've had a bounce on the dollar. As I said, a bounce on the dollar, a bounce on the gold. Very unpredictable market at the moment. So we're just waiting to see if the dollar is going to move any further higher, and if we're going to have any more of this vast bullishness in the dollar. Overall, as I said, sentiment remains a little bit flat. We're waiting to see from the next turn of what Donald Trump is going to say he's going to slap more tariffs on China if they retaliate. Obviously, he is looking to negotiate with other regions and countries as well. Europe are going to say that they're going to retaliate as well. They haven't actually yet. So that, look at the charts for any European pairs or any Euro stocks that could start moving a bit more further downwards. Obviously, the FTSE had one of its worst days ever a few days ago, FTSE 100 index. So we're looking at all these global indices, how they've been affected, and what is next to come in this chaotic market space. Obviously, we had the pandemic, we had the 2008 financial crash. This could be the next big move in the market, and obviously profits to be made as well, opportunities there. So obviously we'll bring you all the latest in the fundamentals and technicals as they come. So stick with us, stay ahead, trade responsibly, and we'll speak again next time. Bye for now.